moderator of this session. A lot has changed in the world since we gathered in Austin in January for the first Domain Economic Forum, also NamesCon Austin, if you want to call it that. And on today's panel, we're going to be bringing you up to speed on how social, political, and of course, public health upheavals are impacting and did impact the domain industry. And we're going to look at that from the registrar side, the registry side, and the investor sides. Now, let's meet our panel of industry experts. Joining me today, we have Paul Nix, the General Manager and Vice President of Aftermarket at GoDaddy. Hey, Paul, thanks for joining us.
Hey, Bill, thanks for being here. Good to be here.
Great to see you again. Also joining us today is Karan Jaju, the Senior Manager of Radix, where he also looks after their amazing premium domains. Hey, Karan, great to see you.
Hey, Bill. Good to see you again.
Thanks for joining me. And last but not least, Matt Wegerson, the CEO of Botus, is also joining us today. Hey, Matt, great to see you.
Nice to see you. Thanks for having me.
Thank you all for being here. For more details about our panelists, please refer to the NamesCon online agenda to access full speaker biographies. And during this session, we will gladly take questions via the live chat and answer them if we have time. But I'm going to start diving into questions because I got a lot of questions for you. It has been a crazy year. I mean, I know that when we were heading to Austin, we all had concerns about what was going on, particularly with the coronavirus, but I don't think any of us realized that things would go just kind of as crazy as they did. So my first question, and this is for all of you, but we'll start with Paul, is what's changed most significantly from your perspective in the domain industry since January and since we gathered in Austin?
Sure. I mean, really since January, since March, call it early spring, we had already been experiencing that shift from brick and mortar to kind of online. And there's just been an acceleration, a massive acceleration of, shift to digital from brick and mortar. GoDaddy released our Q2 numbers a little while ago, and we showed that, we have over 20 million paying customers now, which when you look at year on year, we'll show you the acceleration, our new customer growth is over 200% year on year. So the shift to digital is accelerating, and that's certainly good for the domain industry because everyone's going to need their digital identity, their presence online. But that's the biggest shift for us.
Wow. Karan, what about from your perspective? What's changed most significantly in the domain industry since January?
Well, since if you compare this to the NamesCon in January, I think what's different is instead of being hungover for a morning panel, I'm in my home talking to a computer, so that's definitely very different. At the macro level, like Paul said, I think it's been a great time for the industry overall. Across markets, there's been substantial increase in digital engagement, and businesses of all kinds were compelled to move online and maintain continuity. And businesses that had no prior experience of being online had to set up and market their businesses virtually. So there's been unprecedented demand in e-commerce and accelerated need for web presence. And this is across verticals and geographies, right? And this is indicated through search trends and so on. So we expected this to happen in 3 to 5 years. I think it just happened sooner. And there's this quote that I think sort of sums this up quite well. I'm sure all of you guys have seen it by now. There are decades where nothing happens, and then there are weeks where decades happen. So they attribute this to Lenin. I'm not sure it was ever supposed to be in this context, but it's very relevant. And the single biggest change that we've seen since Jan is just the active growth of online retail, right? If you look at e-commerce penetration, what took 10 years in the US took just 8 weeks once the pandemic hit. So 10% in 10 years and then 10% in 8 weeks. So, and it all starts with the domain.
It's happened so quickly, yes. Yeah. So I wanted to ask Matt, because Matt, from the Botus perspective, you specialize in monetizing domain names. So from the kind of advertiser parking perspective, what's changed most significantly since January?
Well, just pretty much like Paul has said, like there's been a massive shift to the digital world, and with that comes the traffic and revenues. So traffic and revenues has pretty much gone through the roof. It's really hard to gauge for us because we've been growing before that. So I would say probably traffic and revenues have grown between 30 and 100%
That's just since January.
just since January.
Wow.
So the growth has been absolutely astronomical, and this is again a result mostly due to the COVID, yeah. So that's pretty much been the biggest change, and it's I think that even if COVID goes away and there's a cure, there's probably a lot of people are still going to stay online, and that probably means that there's still going to be an increase in traffic to web properties all over the world for like the long time to come. So that's that's been the biggest change so far.
Yeah, it's like this. It's like the, I don't know, the powers that be hit like a fast forward button. It was like fast forward 10 years, and we're now living 10 years fast forward in the online space.
As a matter of fact, like the online ad industry, it was projected to be $500 billion annual industry by 2024. And probably it's there end this year.
Wow.
if I were to guess, because there's at least a 30% increase across the board due to the push to the digital ad space, the digital
Yeah,
space.
and I'm gonna hopefully drill down a little bit more on the advertiser's perspective a bit later. But I wanted to go to Paul and ask, although of course from a NamesCon perspective, we're all about the previously registered domain names, the premium domain names. But I wanted to ask you from a registrar perspective, what are you seeing in terms of primary registration, basically the new domain registrations? What have you seen since January?
Same. As the switch to digital is accelerating, the need for digital real estate or digital identity continues to go up. I think that as the aftermarket goes, so goes the primary market. There's pretty tight correlation to people looking for inventory. They're either going to buy the good stuff that are held by the suppliers that may be listening here, or they'll look for something unique and interesting, maybe in a new GTLD or CCTLD. But as customers come online, and there's still billions of customers that are not online, they're going to need a space to call their own.
And for both Paul and Karn, from the premium domain perspective, were you seeing any kind of sweet spot in terms of pricing? So, for example, were you noticing during this kind of tumultuous period that you're selling a lot of whatever $4,000 names or $2,000 names or $200 names? Anything on the premium side, both Paul and Karn?
I'll start. For me, it hasn't shifted that much. The sweet spot has always been in that $2,000 range.
Interesting.
That call it $2,000, $2,500 two-word.coms are doing as well now as ever. I think those are really the sweet spot for us.
And what about you, Karn? What have you seen on your?
I think so. We definitely, you could clearly see the trend with certain extensions. So not so much the price, but the type of domains. So .store and .online saw the highest spikes. .store in Q2 had 550% higher domain registrations versus the previous year's quarter. So quarter 2 2019.
550%?
550%, yeah.
Wow.
So, it's just the whole industry saw that upswing, right? But I think in particular, very relevant, suitable extensions for the new normal definitely saw more disproportionately higher uptake. In terms of the average price of domains, we actually noticed that the average annual price, our model is slightly different than, say, the aftermarket model, and we charge an annual premium fee every year. We saw that the average fee per year is actually higher now than it used to be earlier. And that's probably because we are also selling a lot of domains that are in the $5,000 tier or the $10,000 tier. So these domains are registered for $5,000 and renew at $5,000. So we're actually seeing more of those registrations.
Wow. It just blows me away how far we've come in a relatively short period of time. And it's unfortunate that it was a horrible medical emergency that led to that. But it's strange how every cloud has a silver lining. Matt, I wanted to ask you, from your perspective, you have a lot of domainers using your platform, and you allow them to kind of manage their names, and presumably, you're seeing the volume of leads and inquiries coming in. Correct me if I'm wrong there, but have you seen data around that in terms of inquiries on park names?
Yeah, and inquiries definitely, like, since COVID has started, at least the first month or two, there's been a massive increase in inquiries and domain sales that have started through our platform.
Was there a particular month that you sort of said, "Wait a second, something's going on here"?
Right, it was like March, April, and I think
okay.
a lot of people have just been like, "All right, I need to start my own online business at this point." So I think that's pretty much what we've seen. But other than that, I mean, our specialty is mostly monetization. But I think as time goes on, we're gonna keep track of more on the sales side of things as well.
Yeah. Well, Paul, it's a good segue to you, because you have a lot of domain investors using your platform, using your premium listings and the auction marketplace. So, in the discussions you've had with your domainer clients, how has business changed for them? What are they telling you?
At this point, the leads coming in are increasing for sure. Either through the network, through the registrar channel, after an DLS, et cetera, but also through the lead forms, this domain for sale on your park's page, right? So our sales teams are busier with the increased leads. And I think what you're seeing, the type of consumers that are starting to shift, is the ones that have been in kind of their walled garden. If you think of a brick and mortar, could have done just fine with only using Yelp or something along those lines to drive traffic to, foot traffic to their brick and mortar store. But now they're having to do order online. They're having to do curbside pickup, things where you have to interact with customers in a more one-to-one experience. You can't do that with some of the walled garden experiences that you've seen. So we see a lot of shift in, these are people who own businesses already, and now they have to go to a more order online, deal with you online, scheduling online. So we're seeing a big uptick in types of website activation and things of that nature immediately after following the domain name. So that's really been a big shift of ours, is the type of consumer.
I know, as my role as a buyer broker in the industry, and I began the year around February, I was like, okay, I got to prepare for a potential meltdown here, because people are going to be so freaked out, they're not going to want to buy domains and spend a lot investing in domain names. And while I saw a little bit of softness in April, pretty well come May, business has just picked up, and it's been a really solid year. And I see that with a lot of the colleagues I've talked to, buyer brokers who were being quite busy. I want to ask Karn, you're selling obviously to end user buyers, but in general, have you noticed a difference in terms of who's buying your names in this period? Like Paul mentioned, that it might be bricks and mortar companies are quickly having to move online. What have you seen in terms of the customer of your premium names, or your primary registrations as well?
I think it's already established that the crisis affected small businesses significantly, and I think we even though this is a growth opportunity for our industry, let's also acknowledge that we are also enabling a lot of these business owners looking to build an online community and trying to transition online. So I think a lot of our customers have been these SMBs. They've also been solopreneurs. There've been all sorts of brands. So I don't think it's a very specific kind of customer that we've seen. So I think it's sort of spread across for us.
Are they particularly price sensitive, or I'm just
I mean, that's what we
wondering.
thought at first. We thought that people would want to, preserve liquidity. Businesses may not want to spend. Domains may not be, sort of the priority for a business at this time. But it seems like people really want to get online and, get there fast, and they really don't want to cut corners when it comes to their sort of online brand. So it does seem that, what we probably anticipated, it actually went the other way around, where people are probably happy to, pay a little extra. And I guess our model also, which doesn't charge that higher fee up front, but rather lets you pay over long term, similar to like a SaaS subscription. So
Mhm.
I think that also probably worked well for such customers.
That makes
If
sense.
you can think, Bill, I mean, one of the things to Karn's point, prior to the forcing mechanism of COVID to going online, a URL that was custom and short and easy to remember, for some brick and mortars was a vanity thing, more than anything. It was used for email, etc. But now it's become absolutely integral to their business. So if you look at it as an investment in the business and a necessity to have something that follows all the rules that we live by, the billboard rule, etc., then it's being viewed as an investment. They're willing to spend more of their marketing dollars on a good domain name because it's that important.
Yeah, that actually was a pleasant surprise for me, was to see. I remember when I noticed kind of an influx of buyer clients coming back to my firm. It was like, wow, like they're feeling bullish enough about the future of their business and the economy and the global economy that they want to invest significantly in their, like they're either starting or restarting their new venture or a spin-off thing. So I thought it was like, oh, this is a great turning point. Matt, I wanted to ask you kind of from the advertiser perspective, because two things tend to happen during an economic upheaval. A lot of times people clamp down and stop or reduce their marketing, and then other companies might decide to actually invest more. So what have you seen from the advertiser perspective?
Right. I think this was like the biggest surprise to us. We've seen like on average CPC drop 1 penny pretty much, which is almost nothing. So I think we've seen
actually for our newbie people, explain what CPC means.
Okay, CPC is cost per click. It's what advertisers pay per click on advertisements.
Thank you.
So no problem. So yeah, I mean, we thought maybe because our business started before the 2008 the mortgage crisis, right? The great financial crisis, and CPCs back then dropped quite a bit across the board. So when this time around, we thought that, okay, this is going to be another one of these events where we see maybe a 30-40% reduction in spending and CPCs. We haven't seen that. We've seen maybe, a penny or two here and there. Obviously, it depends on the vertical. So like certain shopping, people that, we're going to Pier 1 Imports or whether big Rock store, that those budgets dried up completely. But then you have companies like Amazon and other companies that are selling online that have ramped up their budgets. So overall, I mean, we've seen actually at best the decrease of a penny per click, but there's a surge in traffic. So overall, the revenues have been just substantially up since.
Do you get a sense that because basically what you're saying is the advertisers, they're paying the same amount to get that targeted traffic to their website, but is it the case that a lot of smaller businesses may have now either turned to online advertising for the first time or have increased their online advertising budget? Like, what's keeping it propped up when like so many businesses are going out of business?
I wish I could tell you the exact answer here, but what we've seen is there's definitely a shift from non-quality advertising to quality advertising. That's for certain. There's been a massive shift over the last like 6 months. So advertisers that have been advertising through like second tier ad networks on domain names, that has completely just collapsed basically. And those advertisers have went to, Facebook or the big G or whatever to advertise there to receive more quality traffic basically.
So the big
there's
G
been that.
meaning, so big G's Google in this case, they might have been trying Google for the first time.
Correct.
Okay. So I've got lots more questions for you folks, but I just wanted to note that we did get our first question in via the online platform. However, it's a question about valuing a domain name. So that's not really what this group is, although they're quite capable perhaps of giving a perspective on that. That's a question better submitted to Braden and team during the What's My Domain Worth session. So we appreciate the question, but yeah, I think questions about how the pandemic may have affected the industry what might be more suitable. All right, so I'm going to start with Karn, but this is any one of you can chime in here. But Karn, we talked a lot about kind of some of the headwind challenges we've been facing in the industry, but what are the new challenges the industry is facing, like now, here and now? Are there new things we have to be on the lookout for?
I think even as an organization, these are testing times, right? It kind of makes you reevaluate your values and how you operate. And we've course corrected and tried to offer value to our partners and customers. But I think there will be challenges that are really out of our hands. That are we can't operate independently of the state of the world, and the shape of the major world economies is a bit of a concern. And if there's a longer recession, it impacts everyone. Tech stocks were booming for a while, and then the last week saw this correction. I think Tesla had its worst day like ever in yesterday with like 82 billion loss. Like those are numbers that don't even make sense.
Yeah.
So I think businesses will need to stay afloat, and the economy will have to bounce back. So that's I think one concern. And this recent sort of trend that we've seen with increased adoption of, say, new extensions. Now we don't know how sustainable this is. We really hope it is, and we don't know what the renewal rates will be for these. So I mean, there are a lot of unknowns. So I would say there are still a lot of challenges going on.
Yeah, I mean, the great unknown is a challenge. Paul, are there kind of particular challenges you're kind of girding for the rest of this year?
Yeah, I think that for us, to Karn's point, absolutely the market and how people are spending money, and we just talked about advertising revenue, marketing revenue is still not down, and it's all buoyed by a certain optimism that this will go away, and that there's this shift to digital, and that's going to be good for businesses in the long run. And whether or not that optimism is warranted, or whether there's another seismic shift, at least the U.S. stock market, as that goes, a lot of the investment industry goes, has been strong. Potentially, in the face of economic indicators that may say it shouldn't be as strong as it is. So we're just buoyed by a lot of optimism now that this will eventually go away. We'll get into a new normal, and digital will just kind of be the underlying course. There's worry there, certainly. But what I'm seeing also is we've got to continue to build for all the angles where somebody might come in. So you've got stores, you've got websites, you've got all these things. There are different ways of interacting on the internet, and you've got something as monumental as think of WeChat or TikTok or some of these other things that all of a sudden, back to the walled garden argument, businesses can start their identity around something that's very easy to connect with customers. But if it's a WeChat, it might get shut down by the U.S. government. If it's a TikTok, it might get shut down, as well. It might get sold
by the U.S. government.
By the U.S. government, right? Well, there are just so many sort of, the internet, in theory, is the great equalizer. Of anybody can be online, anybody can see anybody else, and that's the optimism factor. But the reality of government stepping in and having control is a big deal. So pushing the message of owning your own identity, being the master of your own website, the master of your own customer interactions, I think will be a very big challenge for registrars and other marketplaces alike to make sure that people understand they can't build themselves up on even a Facebook because you don't know how things are going to go. You need to have your own identity.
So thanks,
I mean,
Paul.
I wanted to add to Paul's point. The TikTok ban was actually something that India has already done. They actually did this even before I think the US was contemplating doing that. And like Paul said, I mean, they are geopolitical sort of factors that can completely change something to the effect of banning like an entire app, a very popular app. And the same thing happened about a month later to probably the most popular game in India, which is owned by Tencent. So the government then banned like more than 130 apps overnight. So it's very unpredictable.
We've got a terrific question, the first official question, I would say, for our panelists. And maybe, Paul, you can maybe take a run at this one. So The question is, it's from John Rashad, and he's asking, why have aftermarket wholesale prices increased rather than decreased during COVID? Great question.
Because retail demand has increased. I think the short macroeconomic indicator is demand, and as we've said over the first 15-20 minutes here, retail demand is increasing, so that brings more people to the wholesale, makes the wholesale margins a little bit better as you're buying, so there's just more competition on the wholesale side.
There you go. Awesome. Matt, question for you. So we've talked a lot about some of these negative global forces impacting, or in some cases not impacting, the domain industry. But let's kind of turn our direction towards optimism. And what do you see from the parking monetization perspective? What do you see as new opportunities for the industry?
Yeah, so I think using just from parking monetization standpoint,
or from your perspective that you're seeing, because you've been in the industry
right.
a long time. And
yeah, I think that well, there's a lot of opportunities like outside the .com space for domainers to go out there and register domains with traffic. I think nowadays, especially as the NGTLDs have grown. So I think there's optimism there because there's just opportunities for domainers to register domains with traffic outside of .com and .net, .org. I think that, on our end, for instance, I think that we're kind of trying to optimize things better for our users and kind of provide them more value. And, I think that's one thing that a lot of companies are doing or need to do these days is provide more value for their users. And that's what we're trying to do. We're trying to integrate sales and I don't know if you've noticed, we've announced like a partnership with Dan.com this morning. So that's something that we're definitely looking forward to.
Congrats on that. And it's almost been a trend in the last few months in the industry. And I don't know if it has anything to do with the pandemic, but it does seem there's been a lot more previously perceived, even competitive companies collaborating in some way. So I think that's just an observation I have. Karn, I've got a question for you, which is, how long do you think we're going to be impacted? How long do you think the domain industry is going to be impacted by what's going on?
I don't know. I mean, I'm very optimistic about the future. We finished five years of 3 of our most popular extensions, and so good so far. And I think we are well poised for this shift to the new normal. And I think in terms of the movement towards an online first world, I think that's where most emerging economies will also shift. And I mean, there are obviously certain there's a flip side to it as well. I do miss those social relationships, and it would have been nice to actually meet everyone and sit down and have a drink or so. But I'm quite optimistic.
So that's a good segue for me to ask my other two panelists. Are you bullish or bearish about the future of our industry?
I think for me, if the past 6 months or so is any indication, I'm very bullish.
Yeah, if I have to repeat what I've basically said over the last 4 answers, then definitely bullish.
Well, it's great to hear, because I don't think any of us, or I didn't expect, our industry to see an uptick during this time. I'm not a good crystal ball gazer, I have to admit, but it's been exciting to see. But it's tempered with sadness for all the pain, personal, private, public, commercial, that so many people around the world are going through. But I think we're all very, very lucky to be in the industry that we are in. All right, so thank you so much for sharing your getting your crystal balls warmed up and looking back, as well as what's been going on, and being so frank about that. We've come to the end of this first session of NamesCon Online, and although our panelists can't see all of you watching, please join me in giving our speakers a big round of applause for being with us today. I should have had an audience laugh track. Whoa, yeah. And anyway, thank you very much, gentlemen. If you have any further questions for our panel of industry experts, please find them online using the NamesCon Online platform. And the organizers of NamesCon welcome your feedback. So please take a moment to rate this session and all the sessions that you attend using the NamesCon Online platform. If you're tweeting about the conference, the official hashtag is NamesConOnline. And I'm Bill Sweetman of Name Ninja. Thank you for attending this session. And coming up next is a short Brenner break. This is your opportunity to meet the NamesCon exhibitors and network with people from around the world that you may never have met before. You can do that in the networking lounge. You can just look at people who are attending and message them, chat with them. So please take advantage of all that the online platform has to offer you. And with that, I'm going to say see you later, and see you after the Brenner break.
It's Brenner time. Wait, what's Brenner?
Wait, what?